Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday, and we're right now at the 4th of April, 2022, about 7:35 p.m., just before the big NCAA basketball game. Pick your team. It's going to be an exciting game. All right. I spent the day today putting together a stock index video report on the S&P 500 index. I cover in detail my thoughts on, let's talk about the strength in April. Out of the past 25 years, 20 of those years have seen April show gains. I talk about the inversion that's taking place in the curve yield. I talk about another report that is a filter on that so many people don't even know about, but it has to do on the liftoff of the unemployment rate and how much you have to get off a low point within 3 months or more, a 3-month moving average or more, before that signals a recession. So because of the strong unemployment rate we have in America, is that going to counter what some are calling for a hard landing? We might get a soft landing. A lot to be discussed, and I do it in detail. You get the monthly charts, weekly, daily, price count charts, and the seasonals. And it's all video, so I discuss all the scenarios right there for you. Just at any point, you can pick up your cursor, click it. I sent out an email of it. Literally, as I'm talking to you, it's going out to everybody on my mailing list, all right? So I'll talk more about it at the very end of this video. As we look at the S&Ps and the Dow, the NASDAQ, and so on, they're backing off a little bit. Okay, but they had a good day again today. When you take a look at energies, they're climbing one more time. You're pushing 110 again in the Brent. What's going on is some of the countries are starting to back away. Slovakia backed away from Russian oil. Now, you're not going to get a country like Finland, which gets almost all of its energy needs from Russia. But because of the genocide that is going on, and if you want to call it anything else and beat me up on YouTube, do it. But it's genocide. When I see people laying in the street and hear Russia say that they're laying there because it was a staged event by the Ukrainians took their own people, tied their hands behind their back, shot them in the mouth, or decapitated them, and that's what went on. I understand it, and that's what we're supposed to believe. There is an element where I don't believe. So what's happening is the UN's pressing this, but now you're going to see another level of sanctions, and it's getting so bad of what Russia's doing. Is there going to be a breaking point for NATO or not? I doubt it, but that's just what you look at. But what's going to happen is trade sanctions are going to get even worse. So you're starting to see the reaction. Wheat, a big export item, out of Ukraine and Russia, popping tonight. Energy, popping again tonight. You know, this is related to that. Bonds and notes getting a little bit of a bid, popping. Fear right there. Gold a little bit higher, popping. Stock market dropping. I don't know what's going on, but it's got all the elements that something's brewing, that the market knows some other sanctions are coming and they could be a little bit worse. Just bringing it up. When you look at the weekly chart of the S&P, and boy, do I cover this in detail in my report, you can see that, are we going to get up to this high? Well, I still don't think so. But there are highs you can make on the daily charts that don't have to get that high to reach another objective. That's the point that, in part, I make in this. You've got higher lows, higher highs. The trend is up until you take out 45.01 and a quarter. When you look at the support, you have layers of support. You've got the 100, the 200, the 18-day moving average, all together, getting your convergence where there's support in that area. When we look at Bollinger Bands, it's far away, but it is not up here at these highs. It's a good 80 points under it. If the market wants to make a run for that, you've got to read the report to see what I'm saying. And you have an embedded reading, which is bullish until the red line closes under 90. Now, there's key dates coming up right around the corner here, and I mean right around the corner, where the seasonals kick in to the upside. We'll see what they do. I can tell you that history-wise, and history is no guide for what the future has to do in any manner. But it's worked 15 out of 15 years. That's fairly impressive. When you take a look at the NASDAQ, you're right into key resistance. And I've mentioned this before. You've done this before. You got up here, you fought, you fell back. Now you've gathered some strength. You're still embedded. If you can clear these numbers here, you might have the move to get up to 15,164. It's a possibility, but you're in that key resistance. And if the pros are buying on pullbacks, this is the area I think they're taking some money off the table as well. When we get over to the Dow, there is not an uptrend. You have a higher high, a lower low. You're fighting at the 200-day, it just popped up, and the 100-day moving average. They're right here, but something more important, you're losing the embedded reading. So if we take a look at the close today, 79.85 is the reading. It's not under 79, but if you close near a point where today, which will be Tuesday's trade, under that, you got to watch out. If you lose that reading, you're probably going back to the 18-day average of closes. What else happened here? If we take a look, you lost the embedded reading on the close on Friday. So as far as I'm concerned, this market is a prime candidate unless today, Monday, it got that reading back for prices to make a run to wherever the 18-day average of closes is. You had an up day, you didn't re-embed. I think you can drop back to that 18-day average very easily. In the VIX cash, I've left this blue line. Is the market going to make a run towards these old lows that it recently had? Well, the setup is there. You've got lower highs, lower lows, and you're embedded. So until the red line closes over 21, I still think the pros are selling into these rallies at this point in time, and they'll bail if you lose the embedded reading. In the bond market, to my surprise, you have a contra-trend uptrend. Why? Higher lows, higher highs. Now, why is it contra? You're under the 18-day average. So the big filter, which is where you're at in relationship to a key moving average. Some people use a 20-day. But if you're under that, you have a downside bias. You've got to close over that to get the upside bias. So the market lost an embedded reading right here. Watch. Here it comes. Which means it's going to try, in my mind at least, this is what I teach, to make a run to that average. And I said the other day, you can see how bearish the market is because no matter how it's working, it's waiting for the average to fall down to where the prices are. And that's pretty much what's been happening overall. When I come over to the 10-year note, you lost the embedded reading. I'm looking for the 18-day average to be hit, and then it's like game on. I'll make a decision what should be done. You're waffling back and forth in the dollar index. I expect that to go on for a while. There is no trend. You have a higher high, lower low. The eurocurrency is going to be the mirror of it, but flip it. Lower low, higher high, stuck in that band. The British pound is still in the bear camp. It would have to close over this high or get over this high, is the right grammar, to negate the downtrend. I said close because you do have higher lows. So if it closed over that as well, then I'm looking at a possibility of getting to the upper Bollinger Band. But like the dollar and the euro, the bigger picture is you're starting to spin a narrow Bollinger Band. So currency volatility has come out of the market. Like it or not, that's what I'm reading it. In Bitcoin, be careful here. The market lost its embedded reading today. When you do that, you're often headed back to the 18-day average of closes. It has not gained it back. Let me just pull this so you can see. This is Friday. This is today, Monday. And you reopen, you still haven't gained it back. So if it's not gained back by closing over 80 today, then I'm looking for quickly 43,500, whatever it is, towards the 18-day average of closes. The differential in Brent, WTI crude, narrowing in, and you can imagine with all this genocide, crude oil and wheat, big markets that are going to be possibly see sanctions. You know, it's going to be hard for Europe to sanction Brent. Where are they going to get all their oil? That becomes the problem. You know, countries that had foresight to build ports where they have LNG terminals, they can get off of it. The others have to run at it. And frankly, if I were them, watching what I'm watching, my number one thing is get past all the BS of politics, start building those ports. Make it a country effort. Don't worry about anything. Go for it. Get off that Russian energy as fast as you can. Lower highs, lower lows, trend down, bias up because you're over that number. What if the market gets over this 112.26? Well, the last break low here was 102.17. We then fall down, and as you'll see, the market hits 102.37, and now it's rallying back. So you'd have the higher lows, and if you take that out, you'd have a higher high. Stay over that, you open the door again for the 119.68 price level. May WTI, not the same picture. You have lower lows and lower highs. So even if it takes this out, it's not as strong as the Brent can be. In the heating oil, you're in an uptrend. Higher lows, higher highs. 391 in a fraction. That's the upside target unless you get back underneath this 228.65. In the natural gas, still very bullish, embedded. I watch the breaks and I see the traders buying it going up. The risks are fairly large, but it's embedded. And until the red line closes underneath the 79 level, I contend that you're just going to see consistent buying in it. Plus, the world wants our natural gas in a big way. So if we're smart, we will build on that industry to build America. A lot of it's going to be for export, and we'll make friends around the world with those exports. So, as I said, I did a special report. And how you view the report, I'm just going to tell you, there's two ways you can get to it. You can click with your cursor, just go up here, click to it, you'll get to the report. If you don't want to do that, you go to our website under the word research, it's there. I cover price counts, seasonal charts, monthly charts, weekly charts, daily charts, and the seasonals. So it is full. It's 20 minutes long video. It gives you the ideas of the inversion, another indicator that should be used as a filter to see if that's going to turn out to be bearish. That other filter is not flashing that signal. Can't right now. We just hit a new low for unemployment. There's a moving average of unemployment that you use with it. I'll show it to you and what a good indicator it has been in the past. So put it all together. You get a game plan. IraEpstein.com. Go up to the word research. It is published right now. Enjoy it. I'm Ira. Have a good day.